Positive note out of Wedbush on the uptake for the iPhone 15. Amidst a lot of naysaying about where we're going from here.
Yeah, look, I think Friday's action, which, as I interpreted, trade down on the Reuters article about Taiwan Semi saying, hey, hold off on sending us more technology equipment.
Certainly hurt tech. I mean, the tech trade was down off that.
It did. And if you look at how it hurt tech, I mean, you had Meta down 3%. They don't buy semi equipment, really. Maybe they are now develop their own chip. But the point is that it shows that we're in shifty sands of a high valuation still in the market, and it's not going to take a lot to get down. Now, we'll go to Wednesday, and Wednesday, look, I don't think Powell's going to change his narrative, which is that, hey, we're going to be data dependent, inflation's still stubborn, rates going to stay higher for longer. So that's a controlling narrative. But where it gets really interesting and where it'll be a test for the market as we go into earnings, because you set the bar very high. Now, we're a little bit away. We're about a month away from the heart of it, but I think that's where it's going to come out. What are earnings going to be? What are companies going to say? And are the delayed impacts of this tightening cycle finally starting to hit? My bet is they are, so I'm more cautious on the market. I've been saying for the last few weeks, and I remain so.
All right, so Shan, we got the Fed decision on Wednesday. We know that, and we're not expecting fireworks out of that. You do have, history suggesting that the weeks after a September expiration can be a little dicey, like the many weeks after that happens. That remains to be seen. As I said, we're largely hanging in there. And by the way, history also suggested that September's a lousy month. Well, we're halfway through, and the S&P is only down 1.4%. The Dow's down a third of 1%. So it could be a lot worse. The question is it going to get that way?
Well, there's certainly some risks ahead of us, Scott, in this last couple of weeks of September. We obviously have the UAW strike, which, although limited in scope in terms of the facilities at which they are striking, it certainly could have some meaningful impacts, not only in sort of near-term GDP, but also longer-term in terms of creating yet another foundation for higher wages. We also have what's happening in Washington. We haven't talked a lot about that. We averted the shutdown earlier this year. We had the Fitch downgrade, but now we're moving into a period where we've got 12 outstanding appropriation bills. We're talking about the potential for the consumer to start to slow down. We're seeing the resumption of student loan payments. So there's certainly a lot, even outside of market technicals, to create some volatility as we're going in these last couple of weeks of the month. I think we should feel comforted the fact that we're hanging in there as well as we are with these outstanding issues. But I think that we should be cautious as we look forward over the next couple of weeks, absent, the day-to-day information that we're not hearing from companies right now, which could be seen as a boost as it was in the second quarter.
Joe, I'm looking at a headline just crossing. Macy's to hire more than 38,000 seasonal positions. So amidst all this talk about what's going on in apparel and whether the consumers getting tapped out, Treasury Secretary Yellen telling Sarah consumer spending remains quite robust. You still got a ways to go to paint a really, really negative story about where this all is heading.
Absolutely, without question. And Macy's probably getting ahead of getting workers because it's so difficult to get the workers right now at this point. Scott, I just think there's a lot of negativity that's embedded in markets overall. You began the show talking about the seasonals. Everyone that I've spoken to today who's observing the market, and certainly myself included, you're pleasantly surprised with the reaction overall. The price of oil at $92. We're coming off a quadruple witching, actually. And early this morning, you had stocks like NVIDIA, which were down significantly. The SMH was down significantly. We reversed that. SMH is in the green. Apple is strong. So I think you treat what we're witnessing today as an example. If you get weakness over the next couple of weeks, I said this on Friday, I believe you want to be a buyer because I think the setup for the fourth quarter is a strong one built upon the chase for performance. And to your point, the economic picture not deteriorating as expected, just being good enough.